Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. GMT every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and the Eigenlayer FDV market. That's not even a real market. That doesn't matter though. You know what we mean. This is our daily show. I'm joined by my legendary co-host, Legendary, and Sammy, and we're going to get into everything to do with the market talk in just a little bit. But just a reminder before we get there that nothing that we say here is financial advice. This modern market is exceptionally risky. We don't know anything for sure, so please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Thursday. It is the 20th of June. How are you doing? How are you feeling?
GM, doing quite well. Just came back from my yearly health checkup. A friend of mine was joking when they do the exercise ECG, the stress ECG, to test the health of your heart. Typically, people are on a bike and are cycling. For me, they would do a variation where they show me different blast FTVs and see how much stress and how much pain I can sustain. But I think it's going to be a bit part of today's discussion in connection where Eigenlayer's FDV came out with the pre-market trading and what we think that this also maybe in conjunction with still ZK Sync might potentially mean for the Blast TG, which is only 6 days away.
Yes, that will be a big part of the discussion today. We're going to talk about Eigenlayer pre-market trading and the implications for Blast. Although Blast is obviously not a restaking protocol and is typically compared with things like Optimism and Arbitrum and ZK Sync, we still think it's interesting. So we're going to touch on that in a little bit. We're also going to get onto the Kraken exploit, whether that's a white hacking situation or extortion, and then also talk about crypto funds. Again, Pantera allegedly raising a $1 billion fund at the moment, considering how that's going for them too. Sammy, I want to come to you first. How are you doing, my friend? What are your thoughts? How are you feeling?
I'm good. I'm just reading the YouTube comments, and T-Rose already going hard on the Sammy Blue Eyes and stuff. So I'm just going through that.
Should be your new official name.
I know. Well, if anyone's on Twitter, I think you should definitely come and have a look in the YouTube comments because they get pretty spicy halfway through.
They are getting increasingly spicy. It looks like, Sammy, one thing that you're missing, you see on the people who are watching us on screen, I've enabled this new thing on StreamYard where, yes, you can type your name first, but then you've also got this little slot. Typically, people might put their Twitter handle there, but it looks like maybe Sammy Blue Eyes should be the little nickname that you put in for yourself. Would you be happy to have that as your on-show screen name, perhaps?
I'll have a look. I'll see if I can change the settings now whilst we get into the news.
Let's do it. Okay. We'll throw to Sammy Blue Eyes later for his takes in just a little bit, but let's get into it as always. Getting to the market talk, the price action, the headlines. This is coming to you from the snapshot, which is pinned up top. If you do find it brings you some value today, please do give it a like. I'm showing it on screen for the people watching in on Twitter and YouTube too. Talking price action first, we've got Bitcoin at 65.7K. We've got ETH at 3.6K, up a couple of percent. Solana down 1% at $136. First headline, Eigenlayer is trading at just over $11 billion FDV. That's $6.76 on pre-markets with around 30K of volume, although that was on one of the pre-markets. I don't know if that was both pre-markets or just one of them. Trying to figure out this pre-market stuff at the moment a little bit. Number two, $3 million exploit of Kraken by security firm Certik. I think that's how you pronounce it. Crypto Twitter seems to be leaning towards the idea that this was extortion by this security firm, whereas they are positioning themselves as saying we were a white hacker. We're going to get into the details there, exactly what's happened. I definitely think people want to know, as Kraken is a significant exchange. I actually use Kraken, so I'm definitely trying to find out what happened there as we kind of investigate during the course of the show. Next, Pantera seeks to raise $1 billion of a crypto fund with an AI focus. The news there was that Pantera Capital, one of the most famous crypto funds, is raising a new fund of $1 billion. The fund said that all cryptocurrency companies will become AI companies in the next 10 to 20 years. It has invested 15% to 20% of its capital in AI-related blockchain projects in its early funds. And the ratio of the new fund will be higher. Interesting to hear that kind of AI focus. I haven't heard that before. Specifically when it comes to these fund announcements. Let's get into the price action on the NFT side. We've got CryptoPunks down a couple percent again at 25 ETH now. Bored Apes at 8.8 ETH flat. It's kind of settled down a little bit after the collapse from a few days ago. Mutant Apes at 1.4. DGods at 0.7. Captain's down 7%, to be fair, at 2.8. Azuki's down 9%. So Azuki's were down big to 2.9. Penguins up 12%. So they've bounced off about a 7 ETH floor to 7.9 ETH. Mad Lads still chilling on the Solana side at 66 Solana. And the Nouns winning bid was at 4.3 ETH. Legendary, that is the price action. Those are the headlines. Is there, before we get into a bigger discussion on the key discussion topics for today and the headlines, is there anything that is catching your attention in particular?
Yeah, there's a couple of things that are standing out to me. First of all, ETH did a very nice thing since we started the show. Went up $50 straight in a beautiful candle from 3,570 to 3,620.
Let me see that.
Oh, you're in euro again, by the way.
Is this still the...
You're
That's
doomed.
fine. Let's do it in euros today. That's okay. 3,370 euros. That's how much.
It's a nice candle to enjoy. In terms of the NFT market, if we take a look at the Mintify heat map, there's a couple of things standing out. Because you mentioned punks, I think interesting to also note that 8 punks have been dumped into bids below 22 ETH at 21.8 ETH actually. And in terms of the other NFT floor prices, as you said, the pudgies seem to have found, at least for the day, we have to see how sustainable all of that is, a local bottom. But also interesting to see that it's not only pudgies that were moving up, but again, Miladies and Remilios both up 3 and 4% respectively. And apart from that, the only other collection that stood out to me on the mainnet side of things is Persona. It is on the top left of the trending heat map, being down almost 20% on the day, and now sitting at a 0.19 ETH floor.
Any thoughts on Persona there, Legendary?
I think Persona does quite well with the creator program that they are running right now, and incentivizing also smaller creators to come on board and offer a bunch of benefits. So I do see, like, at least on my timeline, quite a positive sentiment, and they had a bit of a run to 26-ish last week, but they couldn't sustain that and then just dumped again. But I don't think that fundamentally anything changed about the collection.
Fair enough. I think you're right. They do seem to be quite popular with creators in general. And to be fair, which new collection has managed to do what they've done? I'm not like an expert in that ecosystem at all, but the fact that they're kind of up there, they've been holding a 0.2 to 0.3 ETH floor in the current environment. I'm just not aware of like a recent collection that isn't gaming, because obviously gaming ones go up because they think that there's going to be a token attached to it. But I think Persona's been this kind of collection which has done pretty well, all things considered, I think. You mentioned CryptoPunks. I was just sharing that on screen as well. As you said, a whole host of sales going down beneath 22 ETH overnight. It seems like that's all from one buyer just kind of offloading. So obviously that can be done on Blur quite easily when you can just offload into the bid. So that's quite worrying, I guess. But before we maybe dwell on that,
sorry, on that dump specifically of those 8 CryptoPunks, that person had claimed them back in 2017. So they did round trip punks for quite a long while and ultimately decided to still take a very nice profit on them.
This is one of the key things that when you read Kobe's articles about unlocks and tokens and, you know, all these types of things, one of the key things, or one of my key learnings from it, is that you have to figure out what the other people who's at, say you hold an asset, you have to figure out the other holders' cost basis for their asset. Like how many people are up, how many people are down, by how much are they up? Because when you do that, you can try to figure out like how vulnerable you are to this type of thing. And if the vast majority of people are very, very up, it's hard to think that someone isn't going to take advantage of being in such a huge amount of profit.
Yeah, that would be such an interesting statistic to track it for both, like the entire collection, how many, the percentage of holders who are in book value up or down on the JPEGs, And also to track it around the floor would be interesting. Say, take floor price plus 10, 15% and figure out how many of those listings are or would be up or down if they were to be paired with a buyer.
Interesting. Yeah, that would be interesting. Final thing on the Punks thing, PunksOTC. This is one of the interesting dynamics about Punks. PunksOTC made a tweet where he said, I don't know if I should just try to find it here, actually, to be honest. Maybe I can't be bothered. Something like, this is what no, I should find it. I don't want to get it wrong because it's quite important given his position. For the people who don't know, PunksOTC is like kind of the market maker for punks. And he has been, or they, I don't know if it's an institution, has been buying all these punks, either flipping them, holding them, and has a huge, humongous bag of punks. And he wrote this earlier where he said, a few years preparing for this moment, but becoming increasingly clear what direction we're heading. Path is predestined. Win, lose, we see. Actually, this is getting awfully philosophical. I don't know, sounds kind of religious about like what's the take here? This is the person with the punks bags in his hands, given how many he has, probably in the region, I don't know, 50 plus at least. I don't know. We need to double check that. What are your thoughts on which direction is he saying that we're going?
I mean, PunksOTC has to be innately bullish on punks in the long run. And I would also take that from this post, but it also starts to sound like he is a bit overexposed.
I think so. This would be the biggest calamity, right? Because if someone with that many of a particular asset gets so underwater and gives up, like you're very much exposed to this person. This is the person with who holds such a significant amount. So definitely need to watch his sentiment at least as an indicator for how things might go. Sammy, wanted to come to you here. First, is anything catching your attention in the market that we haven't mentioned already? And second, what do you think about this kind of bounce? We talked about the market collapsing in general the last few days. Seems to have found a bottom. What are your thoughts here?
Well, I think if you're talking about the fungible market, I don't necessarily think it's much of a collapse. I think we dropped maybe 10% from where we were a couple of weeks ago, which isn't in crypto, which isn't a significant amount. I think we've just been so used to that up-only momentum for what, 2-3 months, maybe even longer, that any kind of sustained downturn, we're like, oh, it's the end of the world. But take a step back, and I think you kind of see a better world. I think you see Legendary laughing. Is there more comments in the YouTube? But yeah, no, I think the punk stuff I find really interesting because PunksOTC is obviously very heavily invested. His whole personal brand's about it. He'd have to make one hell of a pivot to come out of that and start brokering other assets. But ultimately, like, I don't know, I think in terms of collectible NFTs, like punks are the go-to. So if you believe in that long term, then I think it's a pretty good buying opportunity over the next couple of weeks, maybe months. It might see some more downside. But I think if I was his boots, this is probably his time to then have that conviction within that particular asset.
I'm just looking at the comments underneath the tweet. Actually, I started reading them. And similar, I think Legendary, you didn't really know what to make of it. Similar to you, all of the comments are just like, let me just show you. Hang on, it's the screen. Like the eye emoji, question mark, eye emoji. It's just like, what do you mean, man? You're holding so many people's bags in your hands. Explain yourself. What? And then one comment as well was literally just like, what?
My favorite comment was, this is some ominous ass tweet. Feel like you're going to put the bottom in the collection, lol.
Yeah. So, I mean, I don't know whether you read that as bullish or bearish. It's definitely confused a lot of people, but I think very important, rightly so. I think it's right that tweet is getting the attention. In fact, I don't know if it's got enough attention, because for such an important collection and for one person to have so much of the supply, I think it's definitely important to check in on there. Sammy, anything else in the market though? Anything else catching your attention? Whether it's fungible, non-fungible?
So on the ETH side, on the Mintify heat map, there's the captains and potatoes that are down. And we spoke recently about if the token goes up, the NFTs follow. The tokens, so the meme land tokens continue to rise. I think it's up a decent amount today. Where is it? 11% in the past day. But yet the assets have gone the other way. And I don't know if it's to do with this State Clan partnership with Borpa. It's just hard to read that kind of market dynamic because it kind of goes against what you'd expect.
Interesting. Very, very good call out, because we did think we had figured that out, where it's like, okay, if the token goes up, the NFT goes up. Well, clearly not
and
the
we
case.
saw the inverse thing yesterday with Pixelmon, where the token went down and Pixelmon floor for the JPEGs went up.
Interesting. Okay. So very good call out. It's clearly not as straightforward as we may have hoped or liked. Let's move into one of the discussion points for today, where I kind of want to get a sense of where we are with our portfolios and how we're preparing for different scenarios. We do this every now and again, where we just check in with each other to give people a sense of what we're up to. We're going to get obviously to the headlines as well in just a bit. We're going to get into the Kraken news. We're going to get into the Eigenlayer stuff, and we're going to get into the $1 billion fund too. But I had found this tweet from Santiago, one of my favorite investors to kind of follow. And he tweeted this: construct your portfolio for the bear case, and the bull case will take care of itself. If you can get comfortable with others making more money than you and some things outperforming your book, then you'll beat 99% of investors in the long run. The reason why I wanted to bring this up was because I think we've mentioned this a bunch of times before. A lot of people are chopping themselves up in this market, getting incredibly stressed at the sideways action. And whether we think it's going to continue, whether you think it's going to go up in a little bit, in 6 months, 12 months, whenever, whether we're full on in a bull, coming into a bear, whatever, just wanted to get a sense of like, what are you guys practically doing to prepare for the bear case? Like, is there a bear case in your mind? If so, what are you doing to prepare for it, to make sure that you win in either direction? Let's go to Legendary first, then hear from Sammy. Then I'll actually talk through one of the strategies I've been employing in the last week or so.
Can I comment on the post first, though?
Yes, please do.
I think, generally speaking, get comfortable with others making more money than you, trading meme coins more successfully than you, etc., is per se very good advice. But you also have to keep in mind where you are in this cycle, where you want to get to over the next cycle, over the next cycles. Because if you're starting out, and Stats had that post, he wanted to talk to a couple of people who made it from, I don't know, sub 10K to $1 million. If you start out with a small amount and you want to hit 6, 7, 8 figures, whatever, then this is not the right advice. Then you can't be like, yeah, I have my 10K stack and I'm comfortably grinding 20% return on stables, and that's very sustainable, and I make 2K a year with that. That's all good and dandy. But if your goal is to make 1 mil, you'll never make that with that strategy. So you have, with generalistic advice like that, you have to keep in mind where you are with your portfolio and where you want to go. And Santiago is definitely someone who couldn't give a fuck about someone making a couple mil in meme coins, while he is maybe not doing that because it's not in his interest or in their interest, and they're happy to have a way more conservative position. That's a very important thing to keep in mind.
Two follow-up things on me for that. First point is, I've actually listened to him on podcasts, and they actually do allocate liquid amounts to memes now as well, which is just an interesting point to note. But as you say, it's very much like risk adjusted. It's going to be a certain proportion versus a load of other stuff, which doesn't need to be. Maybe follow-up question is, because maybe I was in that bracket in 2021. I came into crypto via NFTs. And the reason why I was able to make significant gains quite quickly was because of my exposure to NFTs themselves. The question is now then, Legendary, if you were coming in now, where would that same person, i.e. me back then, where would they have to go to do similar things? Is it the meme coin market? Is that what I would be doing if I was now entering?
Yeah, you would
4
probably
years later
spend a lot of time on pump.market and try to find the next shit that goes from a couple 10K to $1 million market cap, and hopefully not burn your stack in the process. But I had a very good friend of mine enter the space before, or like in the midst of the last NFT bull run. This guy is earning a good 6-figure salary, and he was like, I'm gonna put in 25K into JPEGs, full risk on. This thing either 10x's for me and makes me another $250,000, or it goes to zero. He said like explicitly, I'm not here to, make 10K, 15K in profit, because it's not going to change my life. Either it is significant, or like I book all of that as a loss. And I do think the equivalent today would be memes. I think memes are still more difficult to trade than JPEGs, but that maybe also just because I found that bull market insanity that we had last cycle does not compare to what we see right now with memes, even though you can do a lot of money on them. In terms of the original question that you asked, which was like more to my personal portfolio allocation, I am now at a point where I'm happily moving some amounts of money, some bits of my ETH stack into stable coins, because I do like those 20%, and that 20% to me is a significant amount already on a monthly basis to have.
When you say 20%, what do you mean by 20%?
Stablecoin return.
Oh, lending stablecoins.
Yeah, lending, restaking USDB on Wasabi, different strategies on that. So that to me is already a significant amount to have. What I am on the other hand doing, because that's more like conservative for my risk portfolio, my more degenerate thing is, because I still don't want to cash out from crypto at the moment, and I enjoy that stablecoin return more over my stock market return on my S&P 500s and MSCI World, is actually started selling off parts of my stock portfolio, given that stocks are very, very high. And I just want to ride the, on average now, higher stablecoin return, and not sell stablecoins into fiat, but rather sell stocks, which to me also has different tax implications. So it's just to me the smarter move to do. But progressing into this cycle, I'm going to move more into stablecoins. And at the end of the cycle, the goal is to cash out a very significant amount and throw that all back into MSCI Worlds and S&P 500s, and then have something to also chill outside of crypto, because I would say that I'm still 85 to 90% in crypto at the moment, which is not my long-term healthy goal capital allocation that I want to have.
Interesting.
Laughing on my overall portfolio allocation.
Interesting take on stocks as well. Wasn't aware of that. Okay, that's interesting. Sammy, want to hear your thoughts? And I've got some thoughts too.
Yeah, I think it's definitely the point around where you are in the cycle is definitely so important. I think having conviction in, or concentrating capital within a higher risk bet, like you need that to start with to get you to a point where you can then start diversifying. I think I'm at the point where my portfolio is a little bit unique in the sense that I've gone for the two ends of the risk curve. So I've got bonds and capital in fiat, just chilling with very low returns, but that means I can take a higher risk in the crypto world. So I've got the allocation within obviously the majors and things like that, but also meme coins to a certain extent. But I also do a lot of farming, and I try and find opportunities to arbitrage, and I find that can be very lucrative. But that takes a significant amount more work, because you have to find that opportunity first to then max out that particular gain. And that I can only do that because I'm 24/7 in this market. Whereas if someone's passively in the market, they're just not going to find the same opportunities. So the things that would be available to them wouldn't necessarily be available to us because of that reason. Like if you have that concentration and that attention within a specific sector, and for us that's Blast at the moment, or like you're looking at sort of Eigen and EtherFi and things like that at the moment, but in Athena. But I do think that like there are other opportunities down the pipeline that if you want to dedicate your attention and time to, there's ways that you can do it with a fairly low risk. But you get to that opportunity first, but that just takes a lot more of your time. So if you've got a full-time job, that's very difficult to do.
Yeah, I think that's fair enough. From my perspective, there's a few things that I've been thinking about. In response to the tweet, I am very, very comfortable with other people making more money than me on things which I am not necessarily focused on. So that's actually both from a trading perspective, but also even from a business perspective. This is maybe the thing people don't speak about enough as well. Like when you are focused on a business in crypto, one of the things that's incredibly difficult to do is turn off the distractions of every other lucrative opportunity, say no to probably 9 out of 10 things, and just focus on the business at hand. And I think we're doing quite a good job of that. That's maybe a separate point, but back to the main point in terms of portfolio construction. One of the things that I was doing is that from all the well, two things. One, over the weekend just gone, and I would recommend to do this for everyone who is kind of trying to get a handle on their portfolio, is I created, this is not rocket science maybe, but a spreadsheet that had the variety of things. I know there's tools like Zapper and DBank where you can get a sense of what's in one wallet, and maybe you can even combine them. But I felt like I needed to see it all across everything just in one spreadsheet. So I went through and wrote down how much Ether I had in certain wallets, what the dollar value was, how much stable coins I had, how much Bitcoin I have, et cetera, Solana, et cetera. And just by seeing it at a glance, it was so much easier to notice, like, oh, wait, hang on a second. Doesn't look like I have many stable coins in the Solana sphere, or it doesn't look like I have enough Bitcoin versus how much Ether I have, or, something like that. Just having it all in one place really, really helps me. Maybe because I'm quite a visual person, but it gives me a really good handle on like, oh, do you know what? I need to go right now and fix this kind of discrepancy in proportions. The second thing that I think is helpful to people, Legendary kind of spoke about scaling out. Interestingly, I'm not in the position, well, I'm just not in the mindset of scaling out of crypto. Like, I kind of think like I'm in this business, and I'm not saying I never will, but there'll be a certain amount that just never comes out. It's just in crypto now because I'm long crypto for the future until there's anything that makes me think otherwise. But the way that I'm scaling out as such is by having these angel investment payments come in and using that to have like a very high proportion that goes back into crypto straight away. Say maybe the first set that came in March or April, when the first set of TGs, 75% of that goes back into crypto, 25% into stablecoins. Then the month after, maybe 70% goes back into crypto. What's the number? 30% into stablecoins. The month after, maybe 65% or less, the rest in stablecoins. Now, maybe I might do 50-50, for example, in whichever month we're in now. And then we're slowly going to flip with less and less going back into crypto and more just coming out to stablecoins. Now, the thing you have to bear in mind, which is very relevant, and I'm sure if you've done any type of investment in the space so far, what you'll realize is that top line number that you think you're going to get from your first set of payments from this investing stuff does not guarantee that that will be the number that you receive every single month. In fact, it rapidly declines. So the proportion that you think you're going in with at the beginning is going to end up being quite a significant proportion of the total allocation because the dollar value keeps reducing so much over time. But I think it's helpful in principle anyway to think about this, because whether you have even if you're just trading and you're not waiting on angel investment gains, like you might have a really great month and you might think, okay, well, I'll take 75% of this and go back in, but you can't necessarily assume that the next month is going to be as successful, right? So it's worth thinking about the proportions that you're going to scale out, because sometimes that has to be a little bit dynamic. So when these returns started dropping off for me, I actually thought, like, do you know what? I don't think I can go as slowly as I would like, because I need a proportion to cover tax. I need to have a healthy position in stables as well to feel comfortable. So I actually, instead of initially thinking, okay, I'm going to do 75% this month, which I think I did in the first month, I literally went almost all back into crypto with the gains. Then the next month came and it was a bit less and a bit less. And I was like, well, I think I need to drop down more. So maybe this month it will only be like 60-40, and then it might even be 40-60 straight away. So that's one of the things that's been on my mind a lot. Legendary, you spoke about this kind of scaling out of crypto entirely. What do you think of my way of scaling out? Does that make sense? How do you think about that?
Just maybe the quick addition. I didn't mean like scaling out entirely. To me,
Sure.
It was like more having, I don't know, 30%, 40% for my crypto stack that leave,
Sure.
and the rest still remains on the table to keep playing around and degening around.
Got it.
I like your approach. I think we spoke about it a couple of times after some of the big investments that we did, where we're like, now is the time to start allocating a bit into stables and then do more and more and more. I think then you changed or wanted to change that strategy or the timing of that strategy a bit. But I think in principle, it's a very good thing to do. But on the one hand, I think stay consistent with it in terms of like follow through and don't get too greedy. But on the other hand, also have the flexibility if you just want to cash out more at a specific moment in time to do that. But don't run into the risk to be like, this is my 15% for the month I want to convert into stables. But I think this month is going to be so good, so I'm not going to do it, and I'm going to postpone it for a month. Like that's probably the temptation there. But on the other hand, that's like also the risk of my strategy, because my strategy also depends on me finding a specific target where I'm like, yep, this is the moment in time where I'm going to do the big move and remove some of the chips that I have on the table. So mine is a one-time temptation to keep postponing that. It kind of reminds me of Lukify, who said he's going to sell all of his ETH at 3K, and I think went a bit higher than that at the end, but then not all, like a good part of his ETH, but then did sell a good amount of his stack. And you have the constant temptation to be like, nah, maybe this one, if we don't convert in stables, we'll ride it a bit longer. So yeah, no matter how you frame it or approach it, discipline is super important in those like scaling out or converting strategies.
Yeah, I agree. Definitely with the flexibility, one thing that people might not know is that a lot of these tokens, for example, you think you're going to get an allocation and then they just pause it. They just decide that you're not going to get it anymore. So there's been like all kinds of chicanery in the token markets where people, you've signed these documents and you think you're going to be due a certain thing over a period of time, and sometimes they just stop. So it's a bit of a Wild West environment, as the rest of crypto can be sometimes. So hope that's a helpful reflection from us on some of the ways we're adapting to things when either things are not going our way or new information comes to light. Let's get into the headlines, though. We still got 25-ish minutes left of the show. We wanted to get to the first headline, which I think will have big implications for us too, talking about Eigenlayer pre-market price. Again, we've said before that that pre-market prices can't be trusted entirely. They're not necessarily that reliable. But at the moment, as things stand, Eigenlayer is trading at $11 billion FDV. That's $6.76 per Eigen on pre-markets, with around, I believe, 30K of volume. I'm just going to share it on screen for people who are watching in as well, so we can see that. Legendary, any reflections here on the Eigenlayer pre-market price with the caveats that we've already said? This was considered to be one of Ethereum's big hopes for a token. A huge amount of TVL locked up in here. People thinking as high as 20 billion FDV at one point in time. What do you think about this? And then what are the knock-on effects for valuations of things like Blast, and in comparison with things like Optimism and Arbitrum?
Yeah, I think a couple of things on that. First of all, the point that you made earlier on Kobe's article on token unlocks is something that's also very important to understand for Eigenlayer, to have that picture of who invested at what amount and at what time. And given that those implied 11 bill FTV, and even if it comes out at 8, 9, 10, whatever, is still a very good number in my opinion. I think we kind of went from that metric to look at L2 solutions purely and say, if TVL is this, then I expect 1.5x, 2x TVL to be the FTV, or we did that with EtherFi maybe. But I also think that Eigenlayer has reached such a critical size that this multiplier doesn't make sense. Like when there's 20 bill locked up in Eigenlayer, going and saying, FTV of the token is going to be twice the TVL and it's going to come out at 40 bill. It's a lot of moon math actually.
Mm-hmm.
And I just think that even if you put it into the TVL perspective, they are like, if there's 20 to 30 bill in there and the FTV is at 1/3 to half of that with 8 to 11 bill, wherever it will come out at, it's still a very, very impressive number. In terms of what it means for other L2s, I don't know, because L2s have not really been trading in a very strong correlation with the TVL locked up into them. I think the way we looked at them more is to see that Optimism has the OP stack, Arbitrum has its own tech stack, that other L2s, L3s are building on. Now ZK Sync has that obviously too with their SDK. However, they are like 1 to 2 years behind in terms of adoption and on other chains building on them. So I think those are like more important metrics when it comes to looking at the FDV of L2s. And I would have a hard time to extrapolate any implied FDV from Eigenlayer to a potential Blast FDV, for example, because I do still think, and that's despite the fact that USDB, so stablecoins and ETH are both yield earning on Blast, to have any implication from the Eigenlayer FDV on the Blast FDV, on the potential Blast FDV.
Fair enough. I mean, I would maybe come back on that and say, and then want to come to Sammy on this as well. Like, I would come back and say, I think there will be implications purely because, well, I'm speaking for myself here, simple person when it comes to these valuations. I feel like 9 times out of 10, none of it makes any sense. And that's the universe that you need to operate in. It's like, none of this stuff should be worth this stuff. And therefore, the only way you can determine the value is by comparing stuff. And I think if Eigenlayer, with the kind of hugely important development, which is restaking and being the biggest protocol to do that and being the first mover and the first winner there. And if that's only going to be, I appreciate 11 bill is a lot, but I think if it's only going to be 11, and you're going to have so many different L2s, well, I mean, arguably there's going to be other versions of Eigenlayer too. So maybe that's one reason why it would drop down. It just feels like maybe at this moment in time, the other stuff, Eigenlayer either should have been higher or the other stuff should be lower. But maybe that's me thinking that there's only one Eigenlayer, and actually in future there will be more Eigenlayers.
The other stuff also kind of corrected, right? We had EtherFi that came out very, very high at like 7 to 8 bill, or it pumped at least to that FDV. And that was before Eigenlayer had the token or had an airdrop announced. And EtherFi now corrected down to 3.5 bill FDV, which, putting that into perspective with Eigenlayer and having a 3x, pretty much a 3x in between the two of them in terms of FDV multiplier, is a proportion that seems reasonable to me.
Okay, that's fine. Interesting discussion there. Sammy, I want to come to you, and I would love to get Bread's thoughts on this as well. I know he's just come up on stage to kind of work through this idea of, well, just where the valuation is versus where these other valuations are. Sammy, what are your thoughts? Can you take anything from the Eigenlayer FDV and predict forward for the Blast one next week?
Well, I think the only indicator you can take from it is where the market's at the moment. So comparing it at a point in time, I don't think you can necessarily compare these two because it's not apples and apples. It's kind of apples and oranges. I think that Blast has been very different in the way that it's been like airdrop farmed with the Blast Gold. Like I think there's been people that have actually used the application. And I think Pac-Man's very clever at bringing incentives in to get people to actually use the token after the TGE, whereas like ZK Sync, like what is that going to be used for? Like I don't know many people that are actually using the application. Same with Starknet, like very high FDV, low float. I think that was when I was doing a benchmark the other day. I think like Starknet's at 7 billion, which is crazy when you look at, I know, Arbitrum that's at 8 billion. But then looking at the TVL, for instance, you've got like 19 billion locked up on Arbitrum, but only 850 on ZK Sync, or like it just like the numbers just don't necessarily make sense. And I think you actually have to pull back the hood and understand what activity is actually happening on each of these apps on each blockchain or each layer 2, just to make sure that actually, okay, there's stickiness here. There's people that actually want to use it. And I think with Blast, you've got Fancy Top, Cambria, you've got Wolf Game, you've got all these different applications that have actual use cases that people might use after. Whereas I think a lot of these other infrastructure plays have had DEXs and things on. Like I remember investing in a layer one that didn't even have a DEX live. So it's just like, well, where are you going to trade? You have to trade the token after it's live on a centralized exchange. It just doesn't make sense. So you kind of understand why these lofty valuations probably aren't worth what they're written on, the paper they're written on. But I do think that there are certain protocols that have a lot more value, and I think they'll sustain. So I don't think comparing Eigenlayer with Blast, they're completely different use cases. It's the same with comparing Blast to some of these other layer twos.
Sure. Okay. Interesting take. This is, I want to go to Bread now, and I wanted to say maybe why I don't think, and this is just me thinking out loud, not like a deep thought, but why I don't think it's comparing apples to oranges is because in the end, the way crypto consumers come to the market is by looking at the charts, for example, and just saying, well, this is the top 10, the top 20. And I don't know whether they're wondering, like, is this an apple? Is it an orange? Just like, well, what are the token unlocks? And is it in the top 10? And this is the 10th one. This is the 8th one. So which one's better? Like they might be completely different things, but in some way, I feel like this market reduces these very, very different things. I agree with you, but into the same thing where it's just like, well, what's the FDV? What are the token unlocks? And, you know, is this better than the thing that is 9 or 6? Bread, would love to throw to you on that. Like, what's your perspective there?
It actually lines pretty closely with Legendary. He's right. Based on, and this is speaking, my numbers right here are going to be speaking specifically to the L2s, but there is no real good correlation between FDV, or at least like nothing that shows like a proportional growth in FDV is valuation in these tokens that govern them, at least traditionally with the things that we have. And we also have to remember that nothing like activity does seem to have a stronger correlation. The thing is, there is no direct tie between activity and the fully diluted value of the tokens, right? Like they're all governance tokens. You're not making fees based on the fees generated by the chain, based on the activities based by the fees paid. So it's almost, and you're kind of right here, where there is no direct correlation, but there is like a mental model that we're all operating on, whether we acknowledge it or not, right? We see like, oh, Arbitrum and Optimism come up, and Optimism, as Legendary said, is kind of like a beta play on base because everyone's bullish on base. You say, oh, there's activity over there. I feel comfortable holding onto this thing because enough people are willing to say that like token valuation goes up, right? It just kind of becomes this thing when you look at that number. Yes, Starknet is a huge outlier. I don't know what's going on there, but if you look at my chart that I made the other day, it's just out on an island against like basically all of the chains, including L1s. I extended it to include like Solana and Ethereum, and you see that with usage and fees paid by users, so too does the FDV of the actual chain go up. So, or the native asset of the chain go up. So, I agree with that on how to value these things, at least how the market seems to be valuing these things. And then to compare it to Eigenlayer, I'm going to say, yeah, it probably isn't apples or oranges things because for two reasons. One, niche sector and it's the leading protocol and crazy high FTV. So like there's a lot of things there, but also because their intersubjective token that is Eigen, it actually is tied to the usage and value of the protocol. So like there is actually a little bit of a connection between the amount of stuff that's staked in the thing, the amount of usage that takes place on top of it, and the value of the token, because it gets a portion of what's going on top of it, or at least has some delegation rights there. So yeah, so it's kind of against it on two fronts.
Okay. Interesting stuff. Shout out to you for knowing exactly what intersubjective token actually means, and maybe actually even reading the white paper. That's headline news as well. Look, we'll continue to speculate a little bit on this. We've obviously got one eye on the Blast FDV next week. I don't know if we need to continue that discussion now because I'm sure we're going to talk about it and in the next few days too. So let's move on to the next headline. But before we do that, let's hit the Web3 roundup to get you up to speed with everything else that's been happening in the space in the last 24 hours. As always, from the snapshot, which is pinned up top. I will share it on screen for the people who are watching in too. So just as a reminder, more than anything, Eigenlayer announced phase 2 of its token airdrop for today. So if you're eligible for that, just go double check. You should be able to claim those, although they're not tradable yet, right? You just have to claim them and then they'll become tradable later. Number 2, Animoca Brands announces largest community of football fans coming to base with One Football. That's pretty exciting for football fans. SocialFi game Fantasy Top earns 750k in 2 days from the new Tactics mode. Interesting that they've integrated a new mode for the game, making a lot of money still. Jupiter proposes 30% reduction in supply of its token. The token went up 10% as a consequence. Colony will drop TCG based on Pudgy Penguin's IP by OCAP Games. I'm an investor in OCAP Games. It's done by Spencer Ventures. Pretty exciting. That'll be interesting to see how that goes. Next, Turbo flips MOG to become the number 3 meme coin in ETH. Turbo really came out of nowhere, I feel, the last few weeks. Just completely ripping. Thought that was an AI coin that was completely dead, but obviously not. And finally, Pantera indicate $100 million of buying interest for Bitwise's ETH ETF, which people got quite excited about. But just to note that when Bitwise revised its spot Ether exchange traded ETF form, S1 registration statement, they included that in, but it's not like a legally binding commitment. So that was just a registration of interest in that. That is the Web3 roundup from everything else in the space. Legendary, I think it probably makes sense to go to this Kraken security update. Is that where you want to go, or do you want to go something else? Yeah, Kraken?
Yeah,
You're on mute.
Let's go to Kraken. Sorry, I was on double mute. I muted my microphone and I muted myself on StreamYard, and it took me a minute to figure that out.
Cool. I'll set up with what's happened so people are up to speed, because I do think it's important whenever anything happens on exchanges. Obviously, as much as we'd like to be decentralized and be not on exchanges, even if that is your perspective, we kind of want to know what's going on, because at some point in time we do go through exchanges. So let's try to get a sense of what happened here. I'll read through this article from Cointelegraph to get a quick sense. They said blockchain security firm Certik has gone public, identifying itself as the security researcher that cryptocurrency exchange Kraken claimed stole $3 million worth of digital assets. So yesterday, Certik said it had informed Kraken of an exploit that allowed it to remove millions of dollars from the exchange's accounts. Kraken chief security officer claimed that an unnamed security team had committed extortion by refusing to return any funds until the exchange agreed to provide a speculated dollar amount that this bug could have caused if they had not disclosed it. So I think in essence, Kraken found out about this bug. Certik had found the bug, took $3 million worth of digital assets out and said, we will only return it if you now pay us a certain amount of money. So this is what the Certik said. They said, after initial successful conversions on identifying and fixing the vulnerability, Kraken's security operation team has threatened individual Certik employees to repay a mismatched amount of crypto in an unreasonable time, even without providing repayment addresses. In the spirit of transparency and our commitment to the Web3 community, we are going public to protect all users' security. We urge Kraken to cease any threats against white hat hackers. I've probably got a little bit more detail on this, Legendary, but maybe to stop there. A, do you think that's the fair assessment of the facts of what happened? And B, who's in the right and who's in the wrong here? Obviously, it's not great that Kraken had this security breach at all. That's a very bad thing. So that's one thing to say. But the second thing then is, I guess they always have these white hat bounty programs where they have a certain amount allocated to giving to these people if they find a vulnerability. Who is in the right? Who's in the wrong? Should Certik have taken the money? Should they not? What's the situation for you from your perspective?
It's interesting because CryptoX has already formed a very, very solid opinion. Obviously, as you said, have both the statements by Kraken, but also by Certik. From what I was able to gather so far, it doesn't seem like Certik was playing this in a fair way, and it also seems that there were other wallets who were using that exploit at the same time and have pseudo deposited more than those 3 million that the Certik test wallet deposited. That's not something that I was able to confirm myself, but it's just from the info that I gathered, it doesn't seem to be the case that Certik is in the right, but I also don't want to say that with like definitive certainty, because it's just hearsay essentially, and I am not in a competent enough position to verify all of those things on chain myself from a technical perspective. So I'm just going to be a bit more reserved with my opinion here.
Yeah, I think that's fair. So just based on, we're kind of just reporting what people have said more than anything. Brad, your hand is raised, and I know you enjoy being an on-chain sleuth here. What has any of your investigations come up with? What are your thoughts?
Yeah, I tried tracking down some of the individual transactions and I couldn't find the ones they were talking about specifically. So again, it's all hearsay. But I think even understanding that and seeing the back and forth with them, I don't know, it's pretty fucking clear that Certik is in the wrong here, right? Like White Hack is found an exploit, report the exploit, and then you get the bounty for the exploit. What they did here was, and the exploit, there's no user funds at jeopardy here. What the exploit is they like simulated like they were receiving funds deposited into Kraken. Kraken would credit it internally, and then they would be allowed to actually withdraw that prior to it actually being cleared into Kraken, right? So there's a little bit of a lag time of like, I sent $1 million to Kraken. Kraken says I have $1 million. There would be a little delay there for the deposit to be cleared, and then I can withdraw it from Kraken. They were just straight up giving it to him right then and there as soon as it was being simulated. So then if it didn't clear, I still got my $1 million that I could withdraw from Kraken. Like that's what the exploit was. And what these guys did was, right, they did that, and instead of saying like, oh, we've proven this can happen with $5, $10, which they did initially with like a $4 transaction, they did it, and then they told their homies, and their homies did it to the tune of like several $1 million, and they did all of that, and then they're like, well, we're going to hold on to this money until you give us a reward that is commensurate with the amount we fucking stole from you, so that we can give it back. And like that's whether or not you agree with I don't know, the amount that they should be paying to Kraken should be paying to Certik for finding a pretty big bug. That's just not cool, I guess is probably like the most layman's ways to say it. Like that's not how you do the business. And all security professionals came forward and said like, look guys, like there's rules and regulations and guidelines for doing this kind of stuff. You guys are outside of that, and then I saw some stuff about throwing the money through Tornado Cash and a bunch of other shit. Like, yeah, that's a little sideways too, but I can't say if that was accurate.
Yeah, that's another good point. And I saw some quite prominent kind of VCs come out and say like, we just can't support this kind of tactics to receive reimbursement for. It's ultimately a good thing, which is kind of for figuring out the bug and letting Kraken know. But it's the tactics of how to get paid for that. Just before we close the show, because we only have a couple of minutes left, we'd love to welcome to the stage Forcion, if I'm pronouncing that right, founder and lead security at Iron
Node. It's Iron Node.
Iron Node. Perfect.
Yeah.
We'd love to hear your perspective, man, on this. We're definitely not security experts ourselves. We've just got a few minutes left before we close the show, but we'd love to hear your perspective on what really happened here and your take on how these things should be dealt with in an ideal world.
Yeah. Okay. Thank you, everyone. It's a great space. So first of all, yeah, I'm a security auditor, and also I was the ex security manager at Halborn. It's a well security firm like Certik. So yeah, we actually, this is a really interesting case. Like what Certik did was really unacceptable. But I'm also thinking like maybe media is kind of also, announcing it a bit wrong. Because the weird thing is that the storyline is really something that shouldn't be done. Like even a really amateur, security auditor will not do such thing. So that's really weird. So I'm thinking maybe there is a misinformation. Otherwise, this is utterly non-acceptable. Like even like Certik is a professional firm. They should do audits or security tests when they're allowed to, and when they're allowed to only. There is no such thing like I cannot go and hack a project just because it's vulnerable and then return the funds to them. like this is not my responsibility, and no one asked for such thing from me. Okay, I can report the issue to them, and if they do not remediate, then I still cannot hack them. Like, it is utterly unacceptable. But it's still really weird. Like, it's weird that none of the security firms, I think, will not do such amateur action. So I guess we will learn the details in following days.
I really appreciate your take. I think that kind of lines up with a lot of the perspectives already shared here and some of the other ones that we've seen. So appreciate you for corroborating that. And as you say, it does sound very, very strange for someone to be so far out of line or out of step with the usual regulations and current practices. So maybe there is something more to the story. Maybe we'll have to find that out in the next day or two. And just a final comment on that, as Legendary said, when we do this kind of stuff, we try to be careful with the conclusions that we draw. We are doing this live. We're trying to come to the most reasonable conclusions possible, but we appreciate that we don't have all the facts and all the information. So we're trying to figure this stuff out live. Appreciate you for being a part of that conversation. As I said, that is the end of today's show. Remember, we do this every single day, Monday to Friday, 7 a.m. Eastern Time, 12 p.m. BST, live on X, live on YouTube, Apple Podcasts, Spotify, as well. Catch us wherever you find us most convenient. Take care, have a good day, and we will see you tomorrow. Bye-bye.